Hey everybody, hey traders, Chris Pulver here. It is 4:57 p.m. Eastern Time on October 1st. Happy Q4, kicking things off with a fresh month and a fresh quarter. Historically speaking, the market should be pretty excited that it's October, but we do have some drama happening today. Volatility is up, oil, Middle East tensions. Markets starting off on a sluggish note. Red candle on the day for the S&P, red candle on the day for the Nasdaq. Here are the Qs. Red candle on the day for the Dow. A little bit of a wick low, but a lot of indecision near these all-time highs. And another red candle breaking some fresh lows post FOMC on the small cap Russell 2000. Getting back to the technicals here, I wouldn't be surprised if we have a bit of a pullback. Just take a look at some very simple moving averages here. This is the 50 period, the 100 period, and the 200 period. The 200 period has not been touched in about 200 and, let me get the number here. We're going on about 230 bars, 228 bars since it's been tested. I'm not saying this is going to be the top in the market, but I wouldn't be surprised if this is allowed to catch up and catch up and catch up, and price just either, if we're lucky, the market just goes sideways before we continue to resume any type of higher highs. If it's going to get a little bit nastier and scarier out there, then we come back and retest the 50 or the 100. You can see that we came very close to doing that back in August 5th with that bottom. We didn't quite hit the 200 EMA. So if we're in a healthy buy zone, the 50 period and the 100 period oftentimes will catch price with dynamic support, and we look to see if that will slingshot price higher. If we come down to actually test the 200, now we're going to start talking about potentially a sideways range from a larger top being formed, and the market's going to have to then prove that it can break out and go higher. But let's say that potentially we do hit that 200 EMA. What would that type of range look like? Well, from these recent all-time highs to the 200, that's about a 9% correction area. If we have some big volatility swings in the market without necessarily making higher highs or lower lows, we could be looking at this like 5 to 9% correction zone. Just saying, something I'm going to be mindful of. We did have some oil drama today. Like I mentioned, here is oil. A huge spike. Let me get rid of the moving averages here. Just looking at price. Now, I have been looking for support on oil over the last couple of weeks. I had a 65.50 by 64.50 credit spread on CL for oil futures. Today's candle was pretty large. We had over an 8% swing from the low to the high. That's a pretty big move intraday. I still think there's a lot of support here to see if it stabilizes. I also wonder if this kind of stickiness in oil, if we do head higher and we're trading in, let's say $75 or higher, if this translates into an oil price that translates into higher inflation in the coming months. The Fed is obviously cutting rates. The Fed's trying to hold off and suspend any type of employment drama that the U.S. is having with the slowdown. JOLTS jobs came out today, which came in higher than expected. We still have non-farm payroll on Friday. We have ADP non-farm tomorrow on Wednesday. So we'll see what numbers look like for employment. The Fed obviously wants to see steady and stable jobs. And then we have inflation data, which after the recent print from 2.9 CPI to 2.5, I do wonder if we have one more print that could be better than 2.5, but maybe that puts in the so close to 2% inflation. But man, 2% or lower is going to be a long ways away, especially if oil prices show some resiliency and start to go higher. So this is one thing that could kind of spoil the plans for the U.S., especially the Fed. If they're cutting rates and all of a sudden inflation is going to rear its head, you got to be careful on this potential second wave, or at least seeing inflation resurface going into late in the year or early 2025. So that'll be a theme that we're going to be digesting, in addition to what's happening with the election. We're not that far away from November 5th, and between the employment news coming out this week, inflation data coming out next week, and then we have FOMC minutes. After that, it's all about the election. So I could see the markets struggling, at least in the U.S. side. I could see the market struggling to make all-time highs, giving us some chop, maybe revisiting the FOMC lows from the 18th when we had that low retested here. I do have some hedges in on MES. I'm looking to see if we can get a gap fill on MES, which is a micro S&P futures. And also I have a hedge running on the MNQ, seeing if we're going to come back in and maybe find some of these recent lows. If we have a channel like this after this correction from mid-July to August, if this is going to be looking like this, right? Come back in, maybe making a higher low or a higher low, and then a higher high, and then a higher low, then a higher high. Is this capable of making new all-time highs, or is this the top is in, The market spends all this time with high volatility, chopping its way back up to the highs, fakes the highs, and then falls back down. That range right there could be something that we could absolutely trade in the NASDAQ. So I will be watching for futures actions. If we get this type of trade set up, I wouldn't mind looking at some credit spreads up here, bear call spreads, maybe looking at some staggered futures positions to go basically short in the market and see if we can come back and revisit these levels. But until then, I could see this market with these higher lows and these slightly higher highs getting more indecisive and forcing the market to make a decision. Okay, does it make a decision there? We'll find out. Does it actually retreat in the near term? Something like this. Does it retreat in the near term, doesn't break any lows, and then we pop back up here again? So we'll keep an eye on that one. Some really simple moving averages again, the 50, the 100, the 200. We did test the 200 on the futures market. If I go to the Qs, we also tested the 200 on the daily chart with a QQQ, whereas the S&P did not. The S&P has not tested the 200. The SPX has not tested the 200. Gold is also fairly overstretched. I mean, rising tension in the Middle East and risk-off trading does tend to translate into gold being a little bit more bullish, but how much higher can gold go? I took a look at a couple things today with gold prices, and I'm just making a mental note here. If gold price reaches about 20% to 25% beyond the 200 moving average, I'm looking at a reversion to the mean. Because right now we're sitting about 13.3% overextended. And I'm not saying that we can't go higher. I'm not interested in calling the top, and I never am. But if we get to, let's say, 15, 16, 20% distance away from that 200, something tells me that once we hit a certain level, this thing starts to snap back in, snap back in, snap back in, and these moving averages have the ability to catch up. So I would like to see gold not make new highs. I'd like to see gold pull back a little bit, offer up a bounce off the 50, offer up a bounce off the 100, and then I'm looking to reestablish gold positions to the upside. I'm long on GLD. I'm long on GC. I'm trading options on GC as well, and that's my exposure. I have also, I think it's PHYS and CEF, which are some other ETFs that have some gold and silver exposure. And I'm looking for, additional highs on gold. I'm just trying to wait to add to my position. I think we can all agree that gold's been pretty bullish, pause, pretty bullish, pause, pretty bullish, pause, and it just keeps stretching higher. So it looks like a healthy bull market. I'd like to get a pullback to just establish some type of add-on trade and see if we continue to take this higher up towards 3,000. Silver, similar situation here. I like the recent breakout in silver. Hopefully we're not pulling back too much lower than this trend line that I have drawn. So if we're just, breaking out here, pausing in this area, look to see if there's a little accumulation in silver to then go up and start hitting a $35.80 or $36 price target. If we go to Bitcoin, we've had about a 2 to 3 day pullback in Bitcoin. This actually for 2 days trading, this has been a pretty decent drop, which is really just risk off trading. The dollar got stronger the last 2 days. Bitcoin's been weaker the last 2 days. The NASDAQ has been turning over and topping out a little bit. Here's the last, 3-4 days of trading on the NASDAQ. So if you see some risk off flows, you're going to see that translate into Bitcoin dropping. Another interesting correlation is global money supply. If global money supply is up, that tends to flow into Bitcoin and gold and other things. And global money supply is up, but today was certainly more of a risk-off tone. But it was mostly risk-off in oil, volatility, and the U.S. market. If we take a look at China, I knew I wasn't paying attention to this. This is nice to see that, trades I've been talking about for over a year are finally starting to show they're paying some dividends now, which is great. The Hang Seng Index up 2.4% today. Alibaba, Baidu 6.24, 4.74, FXI 4.15, KWeb 6%. The MCHI, which is the ticker for the MIXI, which is MSCI, and that's with China. That's up 4%. JD.com, Ecom 7.32%. These stocks are absolutely ridiculous looking from this rip. I just plotted a Fibonacci, and I did that today actually during one of my live sessions. I'm just looking at this recent low to high. I'd like to see a pullback if we can get one. My profit target I've got measured in this yellow box. Take a look at this. I mean, even if we get back to this level here at 22.5 or 22.6, there's still a little bit of room to the upside just to revisit this high. If all this is a range and we go from low to high, well, if we have a low here and a low here and we get all the way back to the high, there's still some more room to the upside on HSI. If this is a double bottom, this is a whole different animal. If we go from this measured move to the center high, we get all the way back to the center high and we break above this, China can double. And we could have this recovery, measure that move and plot it on top. That's a ridiculous recovery. Now, is that going to happen in the wake of the US going lower and having risk off tone, globally? Not necessarily. So, as we had this big ridiculous move in China, I'm also very conscious of these levels and looking to take some profit. And I think I would even say conservative levels. But my gosh, I mean, we've ripped like 20, 30% in just the last couple of weeks. So this move has been, 26% on an index. That's ridiculous. Look at Alibaba. I've got these fibs drawn because I'm looking for some type of pullback or bull flag. And I mean, Alibaba from this recent low to high swing, this thing is up, 56%. I mean, these numbers are staggering. Okay. And Alibaba, I've got measure moves up to 120 and 130. There's symmetry up to 130. I'm actually covered on some own shares and some credit spreads and income plays. But if we hit 125, 130, I'm probably just going to end up taking some profit because this measured move to me, I mean, sure, I see we could, hit these levels, but what I don't want to do is have all this profit potential and then see this thing, pull back about 50%, and then we kind of reestablish and have this channel. I mean, I can always get back in and try to participate. I don't think that the market goes in a straight line all the way to these measure moves. If somehow this thing gets beyond this area here or beyond my symmetry point, there is a gap up here. But it would almost have to go so far and so fast that I'm just watching it for the next like 30 to 60 to 90 days instead of getting in the way. So I'm trying not to get in the way. I'm trying to let these China stocks continue to breathe and let them run because man, they're running hot and it's really impressive. Baidu, same type of thing here. If I take a low to high swing, if we have any type of pullback, any type of bull flag, I'm happy to see some more positions that I could establish here, at least in the next, like I said, 30 to 60 to 90 days. A pullback would be great. We don't have a high that's confirmed yet, so I'm going to end up adjusting this. And then FXI, same type of thing. Recent low to high swing right here. And I'll adjust that as needed. KWeb, ridiculous run, also pushing up to these highs. Put in a fib from this low. I'll make the adjustment on the high if we keep pushing higher. The MCHI, again, pushing higher. JD, pushing higher. So I did buy some shares. You can see it on my chart here. I have some income plays, some naked puts. I've got the shares that I bought around 32.50. I'm just letting JD rip like crazy. We got some gaps up here in the high 40s. Man, what a crazy run. So impressive. Hopefully it can be sustained. Risk off tone might change this all up on China. Who knows? But it's weighing right now in the U.S. So market's off on a pretty rough note to at least kick off the month. But you know what? Does that stop the market from trying to grind? Not necessarily. And I say that because what happened in September? If you remember the first week of September, okay, right after Labor Day, this market dropped about 4 to 5%. And what happened? The market actually finished at all-time highs. So I don't think it necessarily means like, oh my gosh, it's going to be a bad month. It doesn't mean that at all. I just think we're going to expect to see some softness here, struggling to break the highs. Data is going to have to do pretty well. Earnings season is going to kick off here in a week or two. Once we roll out with financials, once we roll into Mag 7 and Teslas and whatever else out there, those earnings reports will be important to see. Are we beating revenue? Are we beating expectations on top and bottom line? And if so, is that good for the stock market? Probably. Okay, so there could be some resiliency, but that forward guidance, that optimism is going to be really, really, really important with earnings season, in addition to U.S. employment, U.S. inflation, and then we'll see what's out there geopolitically. So never a dull moment in the markets. That'll do it for today's little recap. I'll do more. So if I see something interesting, I'll post a video, and I appreciate everybody watching, and we'll talk to you soon. Happy trading, lots of profits. Take care. Bye.